I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, this is a little bit of an early show for me, recording pre-opening. Usually I do it about midday on Friday, but I have to take a plane to Chicago in a few hours, so I'm doing this early. It's going to be short and to the point. I'm not going to do the best and worst stocks for the week because I need to keep it a little tighter in here, but we'll be back to that and our investor pulse coming up next week. So a little bit quicker and shorter show. The stock market continued to surge to new highs through Thursday and Friday morning here as two big news items came out. Phase 1 trade deal finally looks like it came true with China. At least the president says so. China not saying much at the moment. And also out of the UK, Boris Johnson, a huge win, and very much looks like Brexit is going to happen pretty quickly in here. Interesting, the movements going on in the UK on their stocks as Corbyn quits, the Labour Party in turmoil, and all that talk about nationalization of their utilities, that's now seemingly off the table, and their utility stocks are surging, giant gains occurring over there, and also in the currency markets as a huge gain in the British pound, taking also the euro currency up with it, and the dollar moving down very sharply. The markets were sloppy for the first few days of the week on very mixed data and waiting for the Fed on Wednesday. FOMC said no changes in policy, except they indicated that they're on hold through 2020. If you remember, coming into 2019, they're supposed to bring normalization, rates continuing to go up. However, the Fed learned that the economy is just too weak for that. So they're being on hold. Well, it actually may be wishful thinking. And I'm betting that rates will be cut in 2020 and that we're going to see potentially record low rates coming up in the next year. Of course, that's in line with my thoughts that the stock market will go into a rough period. Stocks very much have moved down when it looks like rates are going up, as we saw last December. And I think that we're going to see a change in that policy where they're going to need to get to ease again, and that's going to be when the stock market heads lower again this coming year. This morning, Thursday morning at least, the market was sloppy until the president tweeted that he said he were close to making a deal with China. Futures surged. They were down about 7 points before that news came out. And a well-timed manipulation by the president who pushed the market up, S&P's gaining about 40 points off of that low, jumping to a $33 gain in just absolutely minutes. If you look at this deal, it's not a big deal. As much as information as we have right now, it sure seems like they traded China buying more agricultural products, specifically grains, for the U.S., at least postponing the December 15th tariff increase and removing some tariffs, of which there's no specifics right now. China just is saying they do not want to tell the context of this deal. Somehow they want to keep it a secret. The reports are, well, this is a good starting point. And, the president saying big deal just seems very erroneous to me. And the market's reaction, strong certainly, and now here on Friday morning, some gains early on, but hesitant, and even having a big sell-off at one point. I think we're going to see a buy the rumors, sell the news reaction in here. where we get some downside, but I'm still not looking for giant downside in the market because I still think we're in a favorable period. But good starting point, I don't know. I don't think we're ever going to see phase two of this deal. And the two countries were just feeling a little bit of pressure, I think, to get something done. And I think the president just simply succumbed and said, well, I don't want to have to deal with imposing these tariffs on the 15th, so I'm just going to make some kind of a deal and not have to deal with that. The S&Ps, they did get strength, as I said, but now they're early in the morning looking a little bit sloppier. We've seen markets basically move up with any excuse for them, and the S&P 500 now has hit our targets. We were looking for somewhere between 3157 and 3175. And now they're going to be right around that level or a little bit higher this morning. Anything that they gain now is kind of just gravy or excess, in our opinion. And as we said, we thought there would be a flattening out. In other words, gains would be harder to come by as we got up into these resistance areas. And we still think that is true. We'll talk about that a little bit in the short-term view coming up very shortly. I think we must pay attention to the metals right now. Platinum and copper. I'm just absolutely super strong at the moment. Silver not really gaining that much strength yet, but gold and silver look like they're about to be following. And based on our work, I think they're just on the starting line, just revving their engines. And they were actually really moving up pretty strongly on Thursday until the Trump tweet, and then this risk-on mode hit the market really quick, and the metals backed off at that point. But I think that the buyers are there and they're going to be coming in. Part of that is the Johnson win in the UK. I mean, that was great for the British pound and the euro, and we were looking for British pound to go up. That puts the dollar in a really rough spot, as it had a pretty sizable decline, and now it looks like there's a potential for a lot of declines ahead, or rough times for the dollar. That, of course, is a favorable thing when you look at metals. Our big picture analysis that we did a couple of weeks ago on gold and the gold mining stocks, the junior miners, I would say that was spot on. And I'm going to show you the GDX in just a few minutes and show you the bottoming that's going on in there. Now, I think we're in a win-win-win for the metals right now, specifically gold and silver. They win on improved economies if the trade war ends, because there'll be demand. They win as a safety bid if everything falls apart and the trade war heats up again, and then the markets start to look threatening. And also they win if the stock market moves down as money flow changes. Right now, money flow has been, significantly into the stock market. It's been out of the bond market now, which is now falling, and I think that if it starts to move out of stocks in a significant way, that it's going to move heavily into the gold and silver market. Do watch that big picture analysis. If you write to Matt, M-A-T-T, at askSlim.com, he's got trials for you. You can watch that and binge watch our about now nearly 500 videos in our library on trading and investing and just 8 different categories. You can binge watch that all for as low as $14 for trials. We have trials for 2 weeks, for a month, and for all levels. So do write to Matt, M-A-T-T, at askSlim.com for a trial and watch our big picture analysis on gold and gold mining stocks. For the week, the stock market gains somewhere around 1%, maybe a little bit more. There's a lot to go in another whole day of trading here. Bond market is down a little bit more than a point in the 30-year, 10-year basis points up about 5 basis points. They pop up to as high as 192, 1.92. They're 1.89 right now. We think they're headed for 2% plus in the near term, as we're quite negative on the bond market. Gold up about $12 right now. It was more, as I said, before the Trump tweet, and that tweet is was pretty powerful, and the gold market backed off at that point. But we think it's going to move up, and I'm going to show you a breakout level number coming up in a moment. Dollar loses about 0.8%. That's pretty big, as the pound and euro move sharply to the upside, and oil gains about 70 cents. For the week. It was down, as it appears that those OPEC cuts are not enough for the supply-demand situation, and then the oil market popped up again on the news of the trade deal and of the a win in the UK, big win in UK for the Conservative Party. Follow us on Twitter at askSlim, and then also become a YouTube subscriber. We're going to be putting more and more out on YouTube, and make sure that you give me a thumbs up. All right, so that's it for the opening. We're going to move right into the short-term view of our major markets. We're going to move into light crude. Now I'm going to change this chart right over here to a 2-year daily. Well, I'm on a 2-year daily, so now I'm just going to blow this one up and get into the light crude market. So for the week, for this 4+ days that we talked about last Friday, we got about 60 to 65% accuracy. Remember, we look at several different ways that we rate ourselves in our analysis. How well did it follow the cyclical patterns that we're looking at here? How good was support and resistance? Areas that we had put in, is the momentum acting as we expected, or that symbol acting as expected regarding momentum, and how did it do up or down for the week based on what we were looking for. So light crude we did not get right. The stock market went up into the levels now that we expected it to. We thought it would pull back from there and be a small down week. However, it is up for the week right now. So we are not. We can only give ourselves, maybe a quarter to a third credit for that, based on the fact that the market just has not had time to turn down. Based on everything we're looking at here, we're still going to think that happened. So we get 60 to 65% for the week. Light crude being wrong, as we expected it to be a down week, but it was a down week, and everything looked correct until that news came out on Thursday. All right, so now let's get into what we think is going to happen for the coming week. Here's your light crude. We believe that we're going to roll over in here. Now here you see the support zones. You can see this upward channel that we've been trading in, and the cycle rhythms that are right in here. This gray ghosted cycle is an older cycle that we leave in there because we want to see how it still affects it. It seemed like it was in play with the bigger one right over here. And then there's some nesting out in this area here. This is about a 2-week period, week and a half to 2 weeks, that we think it's going to be coming down. We're going to be looking for a decline into this short-term support zone, getting down to 57.50 or so, which is about the middle of that right over there, in the next week and a half to 2 weeks for light crude. There, in our opinion, is not much on the upside. There's your intermediate resistance zone from the weekly right over here. That's about 60.70. We doubt it would get there. We're going to look for it to fail below that area, and maybe fail from near the area it's at right now, right near 59.75. So we're looking for light crude to be just about done with this rally, and then to be moving towards the downside. Overall, it's still in this intermediate resistance area and should have some difficulty making upside ground. Still, we want to note that this upward momentum right over here was reestablished right there. It had a little brief neutral period and then got reestablished. So with this upward momentum, the slim ribbon moving up, this support area right over here, that's about the area that we think it's going to retrace to and be moving down. Next thing we're going to look at is gold. Now, we have been very bullish on the gold market, that it is about to bottom. It's in a sideways correction or chop right over here after making a bit of a bounce from there. Our expectation is that there isn't much more time to be in this zone. It was trying to break out. I want you to note that this rally right over here had it up to around 1491 on Thursday before that tweet came out. and then it pulled back pretty sharply, and now is trading down here. Our opinion is this, first of all, important to note that momentum now has neutralized. So it was in big negative momentum right over here, and it's doing the work it needs to, so it got neutral right here. We think that in either this low or in the next couple of days it's going to be done here and then be moving up. We're looking for a breakout in this coming week or the following week above that area that it traded yesterday on Thursday at 1491, and when it does, we think it's going to move up. Our upward target for the near term, is very near term, is 1506 to 1522. This is from the weekly chart, the resistances, and we think that gold is about to make a pretty good upside move. Now, it's important to note that often when buyers come in the gold stocks, they're getting ahead of what they believe is a move coming, and these are probably very informed people. Take a look at the GDX. Now, I don't usually show this here, but I think it's important analysis, and that is this pattern looks to be breaking out already. So they've been buying right in here, and you could see these lows coming in, silver, gold, and the GDX all in this area right over here, and then this move up. We have gotten above this level right over here and kind of backed off a little bit, but this really looks like it's roaring and ready to go. Now note the chop in momentum right there. So this is going to have to turn positive for it to be a confirmation. Those of you using the slim ribbon, watch for this blue. Oh, it did already. You know what? I didn't realize that. It already turned positive, and now it's expanding. So I take that back. Don't watch for it. It already happened. So we have a positive momentum condition in the gold stocks at the same time that we have the gold and silver not yet being able to turn positive. So gold miners getting ahead. I think they're in great shape, and I think you're going to see some significant moves in the gold stocks. Maybe one of the best valuations in there is Newmont, so keep your eye on that. I'm not long Newmont, but I'm long a number of other ones, including GDX and gold and GLD, and so I'm set up for it, and I'm willing to buy more because I think this breakout is really coming. So we're looking for this move in the gold market to that area that we just talked about, moving up to that first weekly resistance area there, 1506 to 1522 in the next week or two, and then setting up what could be a much more favorable period. So right now gold's just kind of sitting, as you can see, between that support and resistance area. Over the 1491 area is where to look for it to accelerate to the upside. Now the dollar really turned weak, $DXY. And you see this upward channel that we've had in here with all those cycles. So if I'm just going to grab this channel here, take a little closer look here, and extend right over here, and move that to the right here, and you can see the breakdown that's occurring. It broke down underneath that important support right over there, and now the cyclical patterns are suggestive of a downward pattern. We're looking for a little bit lower than an attempted rally in the dollar to these sell zones. I think if it gets up to that 97 to 97.30, 97.55 right there, that's going to be a screaming sell. The question is it going to continue to accelerate to the downside here first? And that, of course, is a possibility. So the dollar, pretty weak. Momentum in the dollar, very negative. And you could see where it turned negative right over here. The projection oscillator is showing a lot of weakness right over here. If it rallies up in this area, it's going to be a sell as we have negative momentum. So we're looking for some digestion or internal digestion, and then further waves to the downside. The euro is improved, though that's nowhere near a breakout, and the British pound needs a little bit of a pullback, and based on what we're looking at in its patterns. So that's going to allow for some rebound in here in the next couple of weeks, potentially, but we think that will be a sell in the dollar. Not great patterns at all. So we're going to look for down and then a mild rebound and a sell in that 97 and a half area and potentially get a small down week. But I tell you that I expect gold to be an up week next week, and I think that inverse correlation is going to hold up. We're going to look at the bonds. We were very negative in the bonds, and it went down. The whole Treasury complex went down. You can see this big downtick right over here came. It was 2 points or more when the Trump tweet came out about the deal. Of course, the Brexit, potential Brexit happening really removes a dark cloud from Europe. So if that's the case, and the EU and the UK economies perk up based on that getting behind them, that dark cloud being gone, then of course that's not good for bonds around in the EU and around the world. So this is, in our opinion, a very bad pattern as it's gotten close to this level over here. We're going to look for it to be a small week. We're going to look for it to come down here, test these levels, and then begin to get a rebound. So that doesn't make for much of a big week. Note momentum has come down in here to negative. So it got worse. We have negative momentum right now, and we expect that the bond market will be tracing a downward stair-step pattern. In other words, yields continuing to rally, and that's why we believe yields are going up to 2% plus in the intermediate term, maybe 2.2. So this pattern in here is not good, and we're looking for further declines with just this week potentially and the next couple of weeks being a little bit smaller because we're getting into that modest rebound period right over there. So looking for overall a negative period though in the bond market, and just a small potential week in the next week as it digests some of this downside move. So the Sp500 Spx, we had talked about it getting up into the resistance area on the intermediate chart that was up in the area of this 3157, this area right over here around 3175, 3177. It made an intraday high a little bit better than that. It's trading right now pre-opening right around that same area right there. We think this is very likely going to be a sell the news event, where it moved up so sharply yesterday, and it's been moving up so much on the anticipation of this really minor trade deal that they have, that overall we think that the rhetoric is not going to be particularly good moving forward. Of course, we're looking at this impeachment process, which is not pretty at all. I call the process being run by the menagerie out there. It's when you look at it, it's pretty ugly. I mean, I don't want to make too many political comments, but I think it's going to get even worse as we go forward, as it is so partisan. Not one Democrat can speak up in defense of the president, and not one Republican can speak up against him. I mean, it's just incredible. It's so partisan, it's so political, and it makes absolutely no sense that they cannot be individual thinkers. How can somebody who's not an individual thinker be a leader of our country? Anyway, that's all I'm going to say about it. And how does that play into the stock market? Well, I have believed there would be a flattening in here. Now we got, this upward pop. It's not that much at past these resistance zones. I still think that those resistance zones are going to be significant. And I'm going to look for this week to be a down week, getting into this minor supports here. The targets are not very low. This is right around here, around 3140. This is 3128. This right over here is around 3115. So 3128, 3115, those are potentials on the downside. The middle of that support around 3128 may be a reasonable target for a pullback in here. And then again, I think we're going to just play around in here. And then this part over here, as we get into early January, this is the third week of January, and towards the end of January, there's a potential for upward spike during that period. So that's, in my opinion, a last hurrah period for this market. And that's what we've been looking for all along. I want you to note that momentum remains extremely strong. The momentum, which turned positive right over here at around 29.85, now has seen about 180 point move to the upside with barely a downtick. One little attempt down here and then moving back up. We made a point about the double gap being pretty significant and showing a lot of strength, and that's this gap here and this gap here, which proved to be correct. Look at how it rides the slim ribbon going up, which is very normal, and that the slim ribbon right now will be coming across this area of our minor support buy zone. We call that a buy zone because it's only an intermediate corrective period in this minor cycle here, and then likely to be moving up again. So minor decline, another buy wave, minor decline, and then a potential for a big buy wave out there. All of this corrective and flattening, and then the potential to move out way over here into January. This is a pretty good look at some very strong repeating cyclical patterns in there that have varied between the dominant between 18 and 22 days. You can see the clarity of them in there as they have fooled me a little bit at times, moving back and forth in lengths. And now that length looks pretty solid and looking for a modest pullback over this next couple of, really the next week maybe in there. That's it. Shortened it up a little bit for you this week because of us leaving to catch a plane in just a brief period of time. So we'll be back to looking at things in a little more depth coming up in the coming week. I want you to be really incredibly careful. You see the news, you see stuff going on. It's so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been